Welcome to Red Pill Markets. Today is March 11th, 2020. Markets did finish up nicely yesterday. This morning, the futures are down about 2%, but that doesn't mean anything. What we're looking at is the NASDAQ chart, QQQ. And the next week, we need to get above the 210 level. If we don't get above the 210 level, we'll be back down testing this 194 level. If 194 doesn't hold, I think we're going down to about 176 level, which is another 10% down. Technically, that is a bear market, but if we just change the way we think, instead of thinking of minus 20%, change it to like a minus 30% and look at it as a longer term at a minus 30%, then we'll count that as a bear market. So even though they technically say 20% from the high is a bear market, let's just change the way we think, because this is where they're getting us at. So the president, the Fed, they are trying to keep us from going under 20% from our all-time highs. I don't think it's going to work because they've been pulling out everything. They're bailing out pretty much everything. Airlines, hotels, cruise ships, oil, banks, pretty much anything you can think of. They're already announced that they're going to bail them out to try to keep the markets up. So that's what pushed the markets up 4 or 5% yesterday. If we don't get above 210 on the QQQ in the next week, and definitely within the next couple of weeks, we're going down to that 180 to 176 area. If we get past that, I think the next stop is about 160. And then the worst case scenario will be like a 140 area. I don't think we're going to get that far because that definitely is a market crash. So I don't anticipate seeing 140 before November. But these are the levels we're watching out for. We're watching to see if it gets above 210 in the next week. After 210, it has to get above 220. After 220, it needs to hit above like 232 in order to be considered still going up. So thank you for watching. Like, share, comment, and subscribe later.